Something spooky is brewing in the San Diego housing market this month, and it's not just the Halloween decorations. We've got a new Fed rate cut, mortgage rates dipping to their lowest levels of the year, and the market sending out some truly mixed signals. But don't you worry, I'm here to separate the tricks from the treats so you know exactly what's going on. I'm J.R. St. Julien with the St. Julien Real Estate Group of eXp Realty, and welcome to my San Diego housing market update for October 2025. Let's get to it. Okay, just earlier this week, the Federal Reserve carved another quarter point off its benchmark rate, dropping it between a range of 3.75% and 4%. Now that's the second rate cut of 2025. And it's what Chair Jerome Powell is calling another risk management cut. Basically, it's meant to protect the economy from a slowing job market before things get worse. But here's the twist. This wasn't a unanimous decision. It passed 10-2, with one Fed governor pushing for a deeper cut and another one saying no cut should have happened at all. In his press release after the Fed's decision, Powell made it clear, further cuts aren't a foregone conclusion. There's strongly differing views among policymakers heading into the December meeting now. So don't expect the Fed to act again unless the economy really demands it. Right now, the Fed is watching the job markets very carefully, and Powell did mention that more large companies are either freezing hiring or laying off workers, often citing automation and AI as the reason for the layoffs. And that's creating what he called a softer labor market. So for now, the Fed's walking a fine line between keeping inflation under control and avoiding a slowdown that could haunt the economy later. Now let's talk about mortgage rates, because for those looking to buy a home, this is the real treat of the season. The 10-year Treasury bond yield, which mortgage rates closely follow, currently sits at 4.09% today. That's down from 4.5% back in May, and while it's a little bit above the recent lows that we saw around 3.95%, the trend has been clear. Rates are finally softening. And as a result, the average 30-year fixed mortgage rate is now around 6.1%, which is the lowest we've seen since September of last year. And before that, you have to go all the way back to early 2023 to see numbers this low. And remember, it was back in September of 2022 when we first saw rates cross through 6%. So effectively, we're almost back to our September 2022 rate levels, which is kind of crazy. So while rates aren't back in the fives yet, it's still definitely a welcome sight for buyers who have been holding out. And with the Fed moving cautiously, this 6 to 6.25% rate range could be our sweet spot for a little while. Okay, now let's turn to what's happening right here in San Diego County. In September, closed sales were up 6.6 year over year, and pending sales rose 6%. So demand has actually been improving, even with all of the economic uncertainty. But here's where the plot thickens. Inventory levels are still much higher than last year, up nearly 30%, even though they actually dipped a bit from August. Now that being said, median home prices still rose to $900,000, which is up slightly from August and up 1% than this time last year. So the housing market definitely isn't collapsing. It's basically just normalizing. And while buyers are being a bit more cautious, there's a ton of opportunity out there. Homes are taking a bit longer to sell, so they're sitting on the market an average of 42 days, which is up from 34 days a year ago. And that's giving buyers a bit more breathing room, a bit more time to make a decision, but also putting some pressure on those selling homes to make sure they're being strategic with their pricing of their home and how they're presenting their homes to the market. Now remember, there's two creatures in this housing market. So let's look at both sides of those markets. You got detached homes and you got attached homes. And since they're both behaving like two very different creatures of the night, we want to make sure we explore those a little bit separately. So for detached homes, median prices are sitting around $1.02 million, which is down about 2.8% year over year. And inventory is still high, but it's actually fallen off decently since August. Now for attached homes, i.e. condos and townhomes, the median home price is about $671,500, which is up 3.1% year over year, but inventory is growing fast. It's up 45% year over year, and months of supply right now sits at about 3.5 months compared to 2.6 months of supply for detached homes. In other words, the condo and townhome market is more of a buyer's market than the detached home market, which is staying a lot more balanced. So if you're buying a condo, you've got a little bit more leverage and a little bit more room to negotiate. If you're selling one, you want to make sure your listing shines, you stage it and you price it right, and make sure you market it well so it stands out. Okay, so what does all of this mean as we head into the last stretch of the year? For buyers, there's no need to fear this market. Right now, and I actually say this every single year, this winter market is truly the best time to buy a home. And right now, we're seeing some fantastic opportunities present themselves in the market. Rates are now the lowest they've been all year. Inventory is high, which means you have more options, and the sellers are more motivated because it's taking longer to sell a home. So it's a perfect window of opportunity before the next wave of demand creeps in, which typically happens in January. And so I'm expecting it to happen in January of next year. Now for sellers, the message is simple. Strategy matters. We're in a market where homes are still selling, but only if they're priced right and show well. The buyers are out there, but they're picky, and they're no longer chasing every listing that pops up. So if you're selling a home, this is a market where execution is everything. All right, so we've covered a lot, from the Fed's latest rate cut to mortgage rate dipping lower, and to what's happening in the current San Diego housing market. And if you found this helpful, please go ahead and subscribe so you don't miss my next month update and any additional updates that I do throughout the month. And if you're ready to start talking strategy for your next move, I'd love to help you make sense of all this. Just give me a call, schedule a time using my calendar link below. I'm JR St. Julien with the St. Julien Real Estate Group of eXp Realty, and thank you for watching my San Diego housing market update for October 2025. And of course, have a safe and happy Halloween. Don't let those mortgage goblins spook you. With the right guidance, this market doesn't have to be scary at all. Take care. Have a good one.